And moving on, at the SelectUSA Investment Summit in Maryland, my colleague Aishwarya Anand caught up with AdamHPhillips, the managing director at AthletesInnovate. With over 70 global investments, Adam shared why India is firmly on his radar, calling it a must for any serious investor. He spoke about the power of sports-led ventures, especially from India, expanding into the US. Take a look.
I want to understand from your portfolio, have you looked at investing into any Indian startup or is that conversation on the radar?
Yes, well, first of all, yes, absolutely. Have invested in two, I think, Indian startups.
Okay.
Out of 72 investments, basically, I've made in the last couple of years, 2 of them have been in India. Probably about 25% of my whole portfolio is international, for sure. I think if you're not investing in India, it's a problem because it's one of the fastest rising young populations in the world. So absolutely.
Another thing I wanted to understand with you is that you're also working very closely with athletes who are transitioning into entrepreneurship,
yes,
right?
Absolutely.
Now with sports tech and with the rise of sports tech that we are seeing, especially in the Indian market, I want to understand that how do you see founders from there tapping into the US market? What's the potential here, especially to get strategic capital?
I invest wherever sports makes a difference. So like the Indian market, especially when it comes to cricket, of course, that's number one. So sports is so sticky in a way that's so great for so many different kinds of investments. So it doesn't have to just be tech. It can be CPG. It can be restaurants. It can be, it can be anything. Because the fandom from sports really sticks to those products and sticks to those businesses in a great way when it comes to investing.
Given your background in both law and innovation at US Dot, what regulatory frameworks are we talking about, especially in terms of foreign startups who are coming to set up their base there, based here in the US, and especially we've seen a lot of Indian startups, they've set up their domicile here because fundraising in US is comparatively much easier than it is in India. So considering all of that, what is your take on that?
It's a great question. So when companies come into the United States, investors can be a little bit hesitant if they don't think that that company's coming in to plant here. This is my advice to any company who's trying to go to any other country, including the United States. If they know you're building a legitimate piece of your business here that's big and investable, there's no question they'll invest if there's traction. The traction overseas then really, really helps.
The funding winter is thawing a little bit. But the momentum is still not as it used to be. So tell me, where do you see the end of 2025? What pace do you see it picking up? And also, if I have to, you told me you've made 2 investments in India. By the end of this year, what does your investment portfolio look like and how many more Indian startups are you evaluating at that time? And which sectors would they be from?
That's a great question. So I'm not currently vetting any. I should be vetting more. I want more. And my 2 investments were in logistics sector over in India. And I think that is a massive sector over there, massive potential for that sector. Because there's, just in terms of the people movement, the ability of commerce to kind of work together, India is one of the most fervent countries in the whole world for that. We need to be, people are going to consolidate that market in ways that are going to be really, really successful, I think. So, so what does it look like in terms of overall venture capital? I think that's a tough question right now. I don't, honestly, 2 things I think are happening. Money is consolidating. I think, bigger funds are getting more money. So that usually means companies have a harder time getting access to that money because they don't have those connections to those bigger funds. So I think it is consolidating. And I think there's enough unrest in the world that people are a little scared right now to sort of spend their money, right? So people are worried that, the U.S. economy looks like it's sliding a little, and so people aren't cutting checks as fast. So I don't see 2025 thawing very much, if I'm honest. I think it will continue at pace. I don't think it's going to 0. I think it'll continue as it is, but slowing down a little bit into 2025. The hope is that we sort of flush all the uncertainty out of the system in 2025, and in 2026 and 7, it speeds back up.